Good morning, everyone, and welcome to the European crossover webinar. And take a look at the data that's hitting right now. Today is going to be FOMC day. We did have general consumer confidence that came in even weaker than expected, looking for negative 7.9, came in at negative 15.6. French consumer confidence came in at 92 versus expectations of 94. That's supposed to have a flash trade balance non-EU out of Italy, but nothing. That's always like Italian numbers. Later this morning, we'll have durable goods here in the States, and then, of course, Fed funds, essentially FOMC this afternoon, which would be 1 p.m. Central Standard Time. Oh, we did see that run up late in the day on those Microsoft earnings. Actually, we can take a look here at Microsoft right now. You can see this solid close here. We'd already got above this, or reclaimed that 216. Remember, we've been sitting there for a while. There's that keys 216. Market grabbed that and just trying to push and further, and boy, we took off. And that really got the NASDAQ going at the time. And we'll just take a quick overview of the FX and then get quickly into the analysis. Not expecting a whole lot of movement until we get past FOMC. Take a look at the euro dollar. Relatively quiet market. We're trapped in here. I did share this. I generally don't look at moving averages, but I happened to have this because I was taking a look at FANG, some stocks, and notice that you can see here on the 20 and the 50, and look how the market's been holding, finally supported the 50-day moving average. But one of the things you want to also look at is, you see how wide these are here? We're starting now to compress. And when you do that, generally you can see a break, and that break, we could generally see some follow through. My guess is if we do close below this 50-day moving average, that'll allow us to move lower. And I was looking for a move down to, I believe it was 1960, right around right in there. See, 1966, 69. Take a look with cable. Cable's still pushing up higher. We do have that weekly, if you see right here, there's that weekly wick there at 37.95. We've seen that before in a weekly wick down over here. We could make a move up here. It's amazing that we're still up here, but we've been holding, been kind of up and down here, but 37.44 is at 78%. There we go. From that low of 1409 to 43.75. Take a look at the Aussie. Relatively quiet, not doing a whole lot, but the Kiwi has seen a pretty good move from yesterday. Well, actually, from yesterday had a good move to close above the 72.26-ish area, although there's not much follow through today, but everything's relatively quiet with FOMC. Then onto the dollar CAD. We did see this market pair back. This was pretty interesting because yesterday, remember, we had our bias chart support. It had it from the day before, 26.84, and the low was 26.85. Well, we kept the 26.84, and the low yesterday was it looks like 26.91. So not too far off. And look, we've come back to test 26.84. So you can see here that, and the high, remember our buy shot resistance was at 27.65. We took that up by just a little bit. Yesterday, I think we moved this up to like 27.95 or something, but we stayed well within this range, and we're just relatively quiet now. Dollar peso, pairing back. We had 1995 yesterday. The market got down to 1993, and we're kind of relatively quiet also. Dollar yen, no changes. His market's absolutely gone nowhere. And dollar index is kind of just market time also. With that, we'll just go on and jump into the indices. And we saw that move higher. One of the things that we did look at, remember we got to that 161% right to the pip on Monday before we saw this pullback here we came back and the market held. I was talking about, as I mentioned, bear with me. Look at the context when we did that. You can see right here that 109,000 in this one, just in this one bar, nearly 300,000. Now we've made this run up here, but my thoughts were, and I was sharing this even yesterday afternoon, and we did push higher on that Microsoft. But I think that can we move higher? I said, yeah, but I think that any moves up in here could be short-lived. Now, once again, we'll see how today plays out, and we have also Apple earnings, so we could make another push, but I just don't see realistically another leg higher. We might get one another leg higher, but all that volume that went off, it doesn't mean that we're bearish, because we're not bearish, but you don't have that fuel boom from before. So what may happen is you can move higher, but you just don't have people with a lot of space as far as when their initial position were put on, so they might be more willing to take those profits. Where I think that rallies may not end up being may not be sustainable, but we'll see. After Microsoft earnings, we might get another push higher, but the key will be, will it be sustainable over the next few days, and we can maybe start to work a little bit lower. So that's where we stand here. Take a look here at Bitcoin. We're weakening here at Bitcoin. We talked about that. Even that day when we were heading towards the significance of 34,800, nothing has changed. This is still bearish. We went up here. I said that this was really key, this 34,800, because it served two purposes. It was not only at the bottom of this broken trend line, but also this level here. And if we got two consecutive 2-hour closes, it would negate this whole down move. And then if we got a close above here, which is smooth at this point, then we could actually start to move higher. And we made it right to 34,800, and we just rolled down here, and here we are pressing lower again. So this is just bearish until we get above that and push higher. Until then, there's no changes. It's been the same thing since we showed on Monday. We were right here, and we were pushing. I said this would be the key, and there's nothing. It's still bearish, no changes. I think I really wanted me to go and take a look at that. Once again, I'll reference here on the NASDAQ. We've already discussed that. We did make that 161% right to the tick, and then saw this pretty good pullback. And like I said, all that volume that transpired, and when you take a look at this overall, you can see how key that 100, over 100, that was 109,000 on just 1/2 hour bar. And you can see here, when you look across here, this was really strong here. Look at this. This is in the first 2 hours. Look how strong. That was nearly 300,000 contracts traded in just the first 3 hours. And even with yesterday, you can see here, there was quite a bit of volume traded just right on the open here. You can see actually for the first, hour and a half, there was a lot of trading, even though we didn't move anywhere. I think people will quickly take the profits, and we dipped back, and the market stayed quiet. And of course, we saw this push here, but once again, like I said, it may be pretty tough to come by to sustain advances. So that's where we stand. There's not really been any real changes here at this point. So with that, we'll just go on and move into the analysis. Let me just go on and cover the news, and then we'll get on to that. So the Australian-New Zealand dollars probe resistance, inflation tops forecast. The Australian-New Zealand dollars were again challenging chart resistance on Wednesday as their U.S. counterpart waned, and the domestic data extended the recent habit of surprising on the upside. The Aussie firmed to 77.40, having bounced to 77.60-70, and the Kiwi rallied to 72.30 and away from support at 71.70. It needs to clear 72.40 to signal the uptrend is continuing, with 72.35 the initial multi-week target. We can retain a bullish medium-term outlook on the Kiwi, targeting 75 by April. Spitzer says the main drivers expected to be the elevated global risk sentiment and outperforming Kiwi economy. The U.S. dollar was hampered by expectations the Federal Reserve would stick with its ultra easing policy at a meeting later on Wednesday and play down the need for tightening anytime soon. And that's what I expect. This would be a huge surprise if we saw any. Forget tightening. They're just not going to say that now. What's his name? Powell could maybe allude to concerns about the debt, maybe. But once again, as we embark on the um, the stimulus package, it's really not the thing to be saying because once again, now that the Trump's out of office, now all of a sudden the Republicans have found religion. There's concerns about the debt. There wasn't any concerns about the debt for the last 4 years, but now they found religion. So once again, I don't think it's the time for. I think Powell would be keen to that. Um, as we just start up or trying to work out, an outlook for this stimulus package, just now all of a sudden say, we're concerned about the debt because he already knows the impact that would have. So it's just not the time. So I'd be very surprised, even if he alluded to that, much less, as I said, trying to look about tightening. That's not going to come out anywhere. I'm just saying the most you could expect, and even that would surprise me a bit, is for him to allude about the debt. He has mentioned, I think, that it was not sustainable. He might give a tepid response to that, and we could see a little bit of reaction. But beyond that, I don't see anything other than to maybe acknowledge. But to say it's a concern, I just don't really necessarily see that. But that would be the surprise. At home, Australian consumer price data surprised to the upside with the rise to 9/10 in the December quarter. Underlying inflation rose just 4/10. The central bank holds its first policy meeting of the year next week, and the CBA senior economist Christina Clifton expects it will again forecast that core inflation will remain below its target until mid 2022. Such a profile will support an extension of the bond buying program. Okay, enough of that. I get bored with talking about Aussie and Kiwi data. Dollar back on the back foot with Fed's Powell likely to sound dovish note. Dollar was stuck on the back foot against major pairs on Wednesday as the markets wait on comments from Federal Reserve Chairman Jerome Powell, who is likely to renew a commitment to the ultra easy policy. The greenback held declines against earlier riskier currencies, with the pandemic recovery hopes getting a boost as its IMF upgraded its forecast for 2021 global growth. Treasury yields, whose rise had supported the dollar at the start of the year, declined overnight and cautioned about the eventual size of the potential delays to the President Biden's 1.29 trillion fiscal stimulus package. The stronger the world economic outlook, the weaker the dollar, said Joseph Capurso. Powell's going to make clear that they don't see any near-term exit from the very ultra-easy policy. That's going to pull the dollar down. Basically, it's all blah, blah, blah. Basically, it's all everything's, you can put the sucker on that automatic pilot for the most part. Traders also keep watch on Schumer, who said the Democrats may pass much of the president's massive spending package with the majority vote, but it's not clear if they have the numbers to override Republican objections. Had a lot of speculation recently that the Biden stimulus package won't be negative for the dollar at all, and in fact will be a positive thing, just on the basis that it should lead the U.S. economic outperformance, said Kyle Rhoda. Okay, enough of that. Let's just go ahead and move into the analysis. A moment. Okay, I did already share this in the chat room, but we'll go over quickly. Euro looks for a break lower. Immediate support is 2103, a close below the 50-day moving average. Opens a test of 1969. Resistance is 2223. So once again, immediate support is 2103. And resistance on the upside, 2223. Onto the cable. Kiwi closed solidly on Tuesday, suggesting further to the run. Resistance is a weekly wick at 37.98. Support will be 39.37. I don't know why I put 39.37. That's crazy. Doggone it. Would have been right there. 36. What I meant to say is 36.37. And 37.98. On to the Aussie dollar. The Aussie remains stuck over the last 2 weeks in a 125 pip range. Resistance would be 77.65, and there was no changes here on this. We supported 72.60. And this is actually supposed to be 78.05. And on the downside, going to be just right back here, which is 76.74. And on the Kiwi, did break above here, but we're just not seeing much follow through whatsoever. Kiwi posted a solid gain on Tuesday, closing above 72.26. Resistance on Wednesday would be 72.80, which we're back making any kind of move towards that. We support at 71.51. Dollar CAD paired back on Tuesday, holding to defend the 26.84. You can see right here, we're still defending it. Wednesday support will be 26.54 with resistance at 27.50. And on to the dollar peso. And that 27.50, you can see right there, we're coming across right there. So we're looking at, you see right here, coming across here. So 27.50. We'll see whether or not we make it there or not. On to the dollar peso. The dollar peso broke lower on Tuesday, challenging the buy chart support of 1995 with a low of 1993. Resistance for Wednesday will be 2014 with support at 1989. 1989. Dollar yen, no changes. This has gone absolutely nowhere. You see, so no changes here. On to the cash dollar index. We're just marking time. We're not really doing anything here with the dollar index. Dollar index is just marking time until the FOMC. Support's going to be 89.73 with resistance at 90.79. Like I said, nothing's happening. I'm just saying is that you can, no sense sitting here trying to, figure out or write a book on how, market's not moving. I mean, it's just not moving, so there's no changes here. The only difference is, like I said, it is FOMC day, so I'm giving it a little bit more room, hence 90.79 right there. That's going to be resistance, and on a break lower, as I mentioned, it's going to be down here. If we can break that lower, which would be right there, 89.73. So we're just trading within this range. On to the cross rates. They have not been moving, at least the Kiwi yen. We have moved up a little bit higher here, so I will give it that. Although when the Kiwi did make that move, we're not doing much with it today at all. So I'm kind of hesitant to say, can we break even further? Because you can see where the resistance comes in right there, essentially close right there in line with that. We didn't close above it either. Um, we'll give it a little bit of room, but I just don't know if it'll even get there, which is at close, which would be 75.12. And support on the downside, this close right there, which would be 74.29. Onto the euro pound. Breaks the new lows here in the euro pound. We'll go and take a look at the weekly chart. And cable still remains fairly strong. Story is, so how much further we can push this? This would be the level that we want to challenge, whether we get there or not, which would be 87.81. And resistance is just going to be right there. That would be that close right now, 88.90. The euro just basically stuck in the mud here. It's open to a little bit of a pullback, just in that potential euro weakness. This would be the challenge here, 56.60. Right there, you see that close here, which coincides really with the high there, which would be 57.22. Onto the euro kiwi. Still trying to press a little bit lower. We'll take a look at how we look on a weekly chart. We are into some support here. We're kind of testing it, but we're right there on it. See, this wick confluence is nearly with this close. That's it right there, 1675. So 67.75, that is. On to the daily. Right there, that close there. It's going to be resistance, 68.57. No changes here in the Aussie. And onto the guppy. Now here with these starting period, boy, they still continue to remain strong. And no changes here in the guppy. We had that high, which is 42.10. No, that's wrong with it. That should have been what I meant to do. I don't know why. It's going to be that high off of that. And that's resistance, which is 42.68. That's immediate support right there. 42.26. So actually coming across here from this top. Right there. 42.22. And with sterling odd, same thing here. These sterling pairs continue to push higher here. But we are running into some resistance coming in here. This big level, 78.25, I would think we'd see selling ahead of that. So you look at this high right there, confluence in here with this one. I'm talking about that wick. So it's going to be 77.91. Oh, that's what we did have. And on the support, it's going to be right there, the low from yesterday, which will be 77.01. Oh, we did see this crazy stock GameStop yesterday, and look at that run here. That thing has been bananas. They have just run over the shorts here. There was a big hedge fund manager had taken a big short position. I think he took it in around here, and they just decimated that guy. Absolutely decimated him. It's pretty wild what's going on here. But look at that move. And actually, I was looking at it and even talking about it in the chat room when we were trading at I think it was 97. And when we made this run to 121, I said, wow, look, it went to 121. As soon as I printed 121, it dropped down to like 112 and then to 110 and sat there. And then all of a sudden, zoom, at the close, this thing started taking off like crazy and then made this run in the after hours. We'll take a look at the FANG. Here's Apple. We do have earnings today. We'll take a look where it stands on the all-time highs also here. Well, look, we're even still pushing higher, 144.59. Knock on the door. They're looking at keying in on the services, so we'll see how that happens after hours. Microsoft, look at that. Of course, we had those earnings come out. Amazon's still holding pretty steady. Facebook, boy, look at this rebound. From all the way to 245, we've rallied nearly $40. Actually, $40. We have rallied $40 off of those lows. Moving back here, we'll take a look at where we stand here with Tesla. All the way up to $900. Peloton, now we're starting to see these pandemic plays come just a little bit. PayPal, same thing, a dip here. eBay's still looking pretty solid. But this is interesting. PayPal and Peloton have paired back. Here's Google here, still holding up relatively well. NVIDIA, relatively quiet, still hasn't been able to take out that 551. We backed off. Netflix, same thing, we've paired back. We're paired back here. But I think, like I said, we really won't see the real move until we get past the after hours. Once we get these earnings today, we've got earnings for Apple and Facebook. They're both out today. So is AT&T, but of the big ones for NASDAQ is going to be Apple and Tesla. Tomorrow, nothing. I mean, Visa, but that's anything that nothing to do with the NASDAQ. So today's the big shebang with Tesla and Facebook out today. And we'll see how we play out after that. Other than that, we're trading relatively quiet. And we'll see y'all in the chat room. Thanks for joining us here at the European Crossover webinar.